EM editor Srinivasan Sivabalan joins us now from London. Srini, EM stocks then have been rallying since October, though there are still several pockets of weakness. But where are the areas of strength in this rebound?
Good morning. It's great to be back. As you said, there is a very clear area of weakness, and that's Asia. Analysts are cutting earnings estimates for Asian companies because of the uncertainty around the trade war and the collapse in exports. But they're also factoring in election jitters in countries like India. Even in LATAM, where an election super cycle has just ended, the governments that have taken power are relatively new and their policy positions are yet unsettled. So there is some amount of uncertainty there as well. So suddenly you have this haven of relative peace and quiet, which is the Europe, Middle East and Africa region. So that's why analysts are raising earnings estimates for the EMEA region, the fastest among the three emerging market zones. So it's neither look east nor look west, but what's up with the middle of the world?
Srini, the current gains in emerging market EMEA stocks have given them the best start to a year since 2012. Does that mean then that they've become expensive? Is that the right way to say it?
Well, yes, EMEA stocks have indeed rallied about 15% from the last year's lows, and one strong week and they could be in a bull market territory. But that's not really made them expensive. That's because the denominator in the PE ratio, the earnings estimates, are going up robustly. So if you compare EMEA stocks valuation with the normally highly valued part of emerging markets, which is Asia, the relative valuation has fallen to the lowest since the 2013 taper tantrum times. So EMEA stocks have a rallying momentum, but on a relative basis at least, the valuations are also falling. So that's a compelling case for value investing.
Given that for global investors, and this is key, EM equity returns are all about currency moves, would it be too risky to invest in the volatile EMEA markets this early in the rebound?
Yeah, well, to answer that question, we have to look for clues in the options market and in the currency forwards market. There, if you factor in interest rate arbitrage and implied volatility measures, you see that the expected carry trade potential from EMEA currencies, the Europe, Middle East, Africa currencies on average is at the highest in about 18 months, whereas for the same carry trade potential from Asia and LATAM are kind of falling or languishing at low levels. So on a risk-adjusted basis, currencies in EMEA region are expected to give safer returns and other assets such as stocks and so on. So put all this together, you have rising earnings estimates, you have falling relative valuation, and you have the best carry trade returns expected. So you have the makings of a rally leader. So Europe, Middle East, Africa stocks have the potential to be the centerpiece of this year's emerging market rebound.